The 3 months to a 10-year is going to invert. I've been talking about this. It was 233 in May, got as low as 27 basis points positive earlier this morning. I think it's about 33 right now. The inversion is going to happen, and everyone's going to come out and they're going to say, okay, deep recession, here we go. But this is a week where the bullish momentum that actually has been established in the market over the last 10 days will be challenged. And I'll tell you, if you come out of the week with
confirmed.
And if you come out of that with that bullish momentum surviving, that's a decent signal in terms of stability. As you know, I bought the Qs last week. It is not Joe that's buying the Qs. It's the market is dictating to me. I'm reacting to it, getting into that position. I've got a stop in place at 293, so I'm not going to lose money on it. And I'm going to hold it for the entirety of the week, and the market will tell me when I'm wrong or right.
Okay. Very interesting commentary today from Mike Wilson of Morgan Stanley. Jenny, I want to read you the following, because I think we're kind of all in this boat, whether you're positive or negative. While we are convinced this is anything but a bear market rally, it does beg the question, is something going on here we're missing that could make this a more sustainable low and even the end to the bear market? He's not willing to suggest he's missing anything. However, the magnitude of the move has bears second-guessing themselves to some respects. Let's remind everybody, by the way, where we are from the June lows. We got this wall. I just want to show you, because we don't read these numbers enough in terms of where we've come from. We have these conversations about where we think we may go to, but here's where we're from. Dow's 8% from the intraday lows in June. S&P's 9%. The Russell 2000's 10%. The Nasdaq, as you know, has been the big winner. It's up 11.5%. So what about that? Is Mike Wilson missing something? Or is he right to think this is nothing more than a bear market bounce?
I don't know if it's missing something, right? But think about what his job is. If he just pivots hardcore back and forth, he's going to lose credibility. So he needs to start paving the way. And I think he's starting to see it the way I'm seeing it now, which is the second quarter did a tremendous amount of work for us. The second quarter consolidated everyone's expectations. So as we go into this earnings season, expectations are probably pretty reasonable. The second quarter consolidated and reset valuations. The second quarter brought, and into July, it brought this concept of recession into all of our dialogue, right? We're all talking about that. At this point, if we're in a recession, who's going to be surprised, right? It's going to be ho-hum. And I think that's kind of what Mike Wilson is doing, too, is paving the way to become more bullish.
You think it's going to be ho-hum? If it's confirmed that we're in a recession, then the question, aren't the questions then going to be, is it going to be shallow or deep?
Yes, and this is where Joe said a deep recession. I would argue that it probably isn't likely to be a deep recession, but what's in people's minds, because we talked about this last week, is that availability heuristic, that availability bias. We are biased to think that the next recession that we're going to experience is like the past two. If you look at a history of recession, the past two have been severe, wildly severe by historic measures. Odds are that it's a more normal recession by historical standards. And maybe that's not so bad. Scott, I don't know anyone, even my mom's asking me about recession.
Yeah, I know, but because the moves by the Fed are also by historical standards.